All right. Welcome, everyone. Welcome to Thursday's live stream. What is up, guys? Woo! It's been a very interesting week. If you guys have been following the markets, if you guys especially have been following the Twitter account, my Instagram account, most importantly, the YouTube channel. I gotta talk as slowly as possible so that you guys know where I'm at and where I'm active, right? If you guys haven't followed me on all 3 social media platforms, you guys know I've been providing some really good information that should help you navigate yourself in this market environment. Okay, now hopefully Tuesday's live stream and hopefully tonight's live stream does the same thing and consistently does the same thing. So as you guys already know, I'm an information sponge, right? I love to read a lot of stuff, a lot of articles, a lot of books, and for example, I got a Kindle for my birthday, and I've been reading a lot from that Kindle. So, hopefully this type of information that I've been getting for the last couple of years are going to, pay off. Hopefully it's worth it to have all that information in my head stored away and be able to regurgitate it back out and recall it at any point in time when I do need it. And so, I think that's another important, not just a lesson, just an important reminder to everyone who doesn't read that you guys should always be reading. It also helps you articulate better, enunciate enunciate words a lot better with more clarity as well, and to really transfer your thoughts right into the words that you're saying, you're speaking, right? So hopefully as time goes on, I can continuously improve that myself. I'm still in the journey of doing that as well, so hopefully you guys can begin if you guys haven't started that yet, that reading journey. Alright, so I'm gonna wait a few more seconds here to make to allow people to come in, a little bit more time. So as I'm waiting here, I'm just going to go over what I was talking about on Tuesday, that there is a big chance that the market is going to continuously move up higher, even with the volume, the daily volume that continues to move lower and lower and lower, especially after last Wednesday. All right, that's when we had the FOMC rate decision, Jerome Powell conference. Okay, and basically tonight I kind of want to show you guys some indications that we're about to see some sort of a rollover in the markets in the next 1.5 to 2 weeks. Okay, and that time frame is very crucial. I will go over it in a couple of minutes. A couple of seconds actually. So SPY again, it should continue to melt up higher slowly. SPY futures is already over 5,000. I believe SPX. Okay, I believe SPX hit 5,000 today. At the highs was 5,000.40. Okay, 500.40. And SPY should most definitely catch up. And if you guys remember, I tweeted as well and put on my Instagram that SPY should hit 500 and XPX should hit 5,000. And that's exactly what we've been getting so far. And hopefully tomorrow, which will also going to be most likely a Green Friday, to just literally just squeeze out any people or any traders who are looking to short tomorrow. And we'll hit that $500 psychological number, and most likely we'll also get a rejection somewhere around 502 to 503. But again, I expect, as I've said on Tuesday, even if we hit 500, there's a slight chance that we can see a quick pop over 500 and continuously move up higher as a slurry of new kind of FOMO buyers come in to start positions or maybe even add on to positions at that 500 number. So, the market just has been on a complete tear since October lows, right? The October 27th official bottom. And I don't think I'm going to repeat myself again on what happened between the transition between October and November. I've said that I first initially said that back in late July and early August. You guys should know that. If you guys have been following me for a while, that was my prediction back then, and it worked out perfectly. But now I am trying to see if my current prediction on the S&P 500 could work out for all of us as well again. So let me begin now. So the S&P 500 definitely has the room to move up, but why are we looking at a 1.5 to 2 weeks time frame where we can see that pullback coming in the markets? Well, first of all, the bond market, right? TLT, IEI, right? So again, IEI is the 3 to 7 year treasury bond ETF, and TLT is the 20 plus year treasury bond ETF, right? So these bond takers are acting in a way where it's telling you that something is off, right? So right now, basically the price action between the S&P and the overall bond market, overall bonds, have kind of decoupled, because if you guys remember, since late October to early November, bonds and equities were moving together, right? They're moving in parallel motion. And right now, we're not seeing that. We actually saw this decoupling happen around December 27th to December 28th. So this is kind of interesting to see, because if you guys remember last week, we've had the surge in bonds, which kind of was also very surprising after the fact that Jerome Powell said the interest rate cuts, the initial interest rate cut, was not going to be in March, and they're most likely going to consider somewhere later on in the year, maybe mid-year. And if you guys remember as well, I initially said that last year too, in late July and early August. I said that initial rate cuts should occur right before quarter 3 or in the beginning of quarter 3. And so that means the Federal Reserve is most likely going to consider a rate cut somewhere around July of this year, right, during the July meeting, or maybe even September. All right, and the reason why I say September is that the Federal Reserve is most likely going to cut rates right before elections, right? And they do say that they like to, just try to make sure that they're doing their best to please Congress, right? But I'm pretty sure Jerome Powell is also looking at the markets and the effect that they all have, not just Jerome Powell himself, have on the markets, and they especially look at the bond markets. So it's interesting to see that the bond market initially moved up rather quickly to the upside during the week of the first FOMC meeting of this year, and rapidly descended back down this week, basically. And that's kind of telling you that this market run currently is slowly losing its leg one by one. And again, we're in a bull market. So the bond market is just one of the very few, or even just one of the many major indications that the market is ready to roll over heading into the next 1.5 to 2 weeks. Now, having said that, okay, the bond market, again, since it has decoupled since December 27th to December 28th, it's interesting to eventually see, is what I'm trying to say, when we see that coupling come back again with the overall equity markets and the bond markets. So again, TLT, IEI, if you guys want to look at the longer term or the short term bonds, those are your two tickers that you guys need to be looking at. IEI always looked better price structure and trend wise, but both are moving down. And that's not a good look for the equity market since they have been following together. So for the fact, again, as a summary, that TLT and IEI have been decoupled from the equity markets, they're not moving together since December 27th through December 28th, is telling you something that there is something going on beneath, right? Beneath the cover of this entire move up higher in the markets, the equity markets. So that is a huge major indication or sign that I'm watching out for a potential move to the downside. Now, the other thing that we're looking at currently is that for the past couple of trading days this week, we've been seeing the Magnificent Seven or just the overall leaders lagging behind the small and mid cap stocks, right? So again, IWM and MDY are the main tickers to look at for small cap and mid caps respectively. So if you guys didn't know that, write that down. IWM, MDY, you guys will know which one is which. The Russell 2000, right, is IWM or the Russell, okay? Oh, you know what? Let me just show you. Why am I not showing you guys? IWM, right? Russell 2000 and MDY, okay? So again, small cap, mid caps, right? So it's been pretty interesting to see that these large cap or mega cap tech stocks have not really moved up much higher. Yes, we have been seeing individual strength from individual leaders like Nvidia, SMCI, right? The select industries and sectors getting that strength. But the most important thing is that, and the most important takeaway is that the names with the biggest weight in the S&P aren't moving, right? For example, Amazon, Microsoft, even Apple, right? So it's kind of troubling is what I would say is the correct term there to use, that we're not seeing corresponding movement from these individual heavyweight mega cap stocks compared to the overall markets that have been trudging up higher even with low volume. So that is one cautionary warning sign. Well, I would say one of the major signs based on a technical standpoint compared to the bond markets and the equity markets when you're comparing those two, and the fact that they've decoupled last year actually. So it's going to get pretty frothy out there if the market continues to move up higher, because that's going to be setting up. Now, I'm going to segue into the time frame here, 1.5 to 2 weeks. As we're heading into February's OPEX, right? So OPEX is pretty interesting. It's going to be interesting because especially after OPEX, when we see that simultaneous expiration of all those contracts, if the week after OPEX will most likely signal the actual top that we need to see, right? And that will kick in that seasonality trend that I've been talking about since last month, right? Since January. And if you guys are part of my new newsletter, the free public newsletter, which I sent out to hundreds of people, so if you guys haven't gotten it yet, please let me know. It's the market trends newsletter. I talk all about this using seasonality trends and other data that is pretty crucial for you to understand, comprehend, right? Fully comprehend and be able to use it sufficiently and effectively on your own. But again, I completely break it down and try to give you guys my own insight into what I truly think about all this information that I've given to you guys in the market trends email. So again, if you guys aren't in, make sure you guys let me know either the Twitter DMs or Instagram DMs, or even just let me know now, or maybe leave a comment down below if you guys are watching the recording. But it's a very good newsletter every single month to be reading. It's one newsletter or one email every single month, so 12 emails for 12 months. You're not going to be spammed. It's just 12 emails per year. Right, I'm going to say that slowly again. 12 emails for one trading year, or per trading year. Okay, so don't be afraid. Don't be thinking that I'm going to spam you with all these different emails. It's just one email per month. Okay, so again, this is one of the major signs that are concerning, it's developing under the hood of the overall market run up. So that's the reason why my members and I have currently piled into some hedges as we continue to see the market run up higher and higher with lower and lower volume, right? So it's going to be interesting to see how those hedges play out, especially after February's OPEX and into the week after February's OPEX. And that's truly where we are supposed to see seasonality-wise that initial big dip in the middle of quarter one as we head into March. And again, I've generally told you guys that March will be the official pivot, and then I will divulge more as we head into the end of this month. But just for now, remember that. Always pay attention. Remember what I'm saying, right? I am your greatest source of direct and most importantly, applicable information. If you guys have been following me for some time, you guys know that's true, right? So, again, just pay attention. Watch the live streams. Watch my stories on Instagram. Watch my posts on Twitter, right? Or simply, if you want direct access to me, second by second, join the CFO Discord community. You guys can become a member, and if you guys decide to DM me trying to become a member, I will give you guys the biggest surprise I have ever done. All right, so make sure you guys DM me if you guys are interested in that. Okay, so again, if you guys also haven't opted into the market trends email yet, again, hundreds of people have gotten it, so there might have been a possibility that it may have bounced, maybe because you guys had too much or way too many emails that you guys need to delete, or maybe it has arrived in your spam email folders. But whatever it is, if you guys didn't get it yet, let me know. Okay, but most importantly, if you guys haven't opted in, let me know. All right, so I think for the markets, that's kind of essentially the plan for now. We'll continuously see that movement up higher into next week as well. February's OPEX week, and it will be the most telling once we're able to see how the market reacts to everything next week, especially on Friday, on February 16th. And that should really prepare us for the possible or the high probability situation that could potentially occur as we head into the end of the month, right? This very, very short month. All right. Okay, now I want to give you guys a sneak peek into a potential day trade that you guys can potentially take tomorrow. Okay, tomorrow. Right. So let me show you guys PLTR. So PLTR, very, very nice. Really big run up since Monday's close. Right. So this is, I think, not 20%. Monday's close. Since Monday's close, this is about 50% move up. Right? It's a huge run up. So there is definitely going to be some profit taking tomorrow on PLTR. Well, actually, for the next couple of days, as this one begins to move sideways to digest this earnings move gap up and this complete drive up higher into my daily and weekly major resistance level at $25. And guess what? This is exactly where we stopped today. The high of today was 25.06, and then, my level right here was exactly at 25.05, so a difference of 1 cent. So this one, if you guys take a look at my Twitter, I actually gave you guys a free trade there, PLTR from move to the downside, and I have next week contracts just to have a little bit of that time. I could have chosen tomorrow's, right, 0 DTE, but I want to have some time for this to develop. I took half off at 15%, right when we hit 24.50. So I got it in exactly at I believe I got filled in. Yeah, I got filled in at 24.99 and 24.98. Right. I had two separate orders, and I had a pretty nice risk appetite today, so I want to make sure I can get some really nice entries. So this one really did it for me. And to the end of the day, take a look at the 15-minute time frame. Really large, well, not really large, but a nice move to the downside to close with supporting volume, right? But thanks to a lot of really big earnings movers after hours, PLTR also moved slightly to the upside after hours. But again, when you see stocks that are being benefited by other earnings, or maybe even not even just, it's not even their peers, the after hours price action doesn't really matter. It all depends on how the stock is doing pre-market. That's when the active trading is actually worth noting, right, and worth taking into consideration. So pre-market will be the most telling sign, but PLTR, this one's definitely a trade that you guys should be looking into tomorrow. My final initial target is 24, but I said to everyone in my Discord chat room that 24.50 will be the official first profit-taking level, and we were able to get that right at the close. So to anyone who's watching this, and if you guys have, to all the members who are watching this and the students who have taken this trade with me, congratulations. This one's looking pretty good. So there is a chance that based on how we close tomorrow, I may hold. I don't care if it ends up being green or red. This one needs to allow the price to slowly come back down and start moving sideways to allow the entire move up higher to be digested, and for my daily 10 and 21 SMAs to catch up, right? So this is another, I would say, kind of looks like a firm, right? A firm. And I don't know why I like to call it a firm, but I know it's called a firm, but for some reason I like to say a firm, but so I'm pretty sure because it's a ticker, right? AFRM. But this one is a pretty it's kind of a great side-by-side comparison to what's happening with PLTR. Obviously, PLTR moved really quickly to the upside in just 3 days compared to a firm where it had multiple weeks to continuously move up higher, right, and short squeeze up higher. But as it did that, it had to allow eventually the 10 and 21 SMAs to catch up, which is why it started to move lower and decided to start moving sideways to consolidate this entire move up. Right, obviously, a firm also had earnings, and I believe they ended up closing right on top or right slightly below its daily 50 SMA. So this one, I'm going to keep my eye on this one, because if it holds all the major SMAs that have coiled up around here at the close today, if it holds all these SMAs, my 10, 21, and 50, which is shown here, it's going to be fun. It's going to be fun. Okay, so PLTR, definitely take a look at this one tomorrow. Okay, so that's kind of it for me from what I wanted to say. Hey, Minor, what's up? All right, Cat and Rivian. Okay, Minor, I want you to start focusing on just a little bit of the names here, right? I need you to focus on, 2 to 3 names only, right? Because I feel like you're kind of expanding too much on your ticker size, ticker list size or watch list size, and that could be potentially harmful for the future and habit-wise. So I'm gonna just choose 2 to 3 tickers there. You did say Cat first, so Cat and Rivian. Cat and Rivian. So Caterpillar here. Yeah, this one, right? I mean, look at where we were looking at this one, right? 223.20. Oh, seems so far away, so far away, right? And I was looking at this one all the way back here, right? So this one, truly massive run to all-time highs, right? Massive run. This one's definitely gonna need some sort of a pullback. But as a company kind of in the industrial industry area, this one can see some good strength as well. So I mean, this is kind of not in no man's land, but it's just literally in uncharted territory, right? I mean, the entire week this stock has been in uncharted territory. And first of all, on the daily, I really don't like how it looks because it has completely filled in the earnings gap up after reaching new all-time highs from or thanks to earnings. So this one's kind of a no-no for me, but there is a chance that there is a possible trade to move to the downside at 320 for CAT, right? So, hey, what's up, guys? Oh, a lot more people joining in now. All right, guys, let me pause for a second for Kat here. For the people who are just joining in, please watch the first 25 minutes of this live stream. Okay, the first 20 to 25 minutes. All right, and watch the recording. I urge you guys to pay attention and watch the recording on the first 20 to 25 minutes. For all the people, hey, what's up, guys? For all the people who are just joining in now, okay, watch the first 20 to 25 minutes of this live stream. You guys do not want to miss what I said. Like, really, actually, I'm being dead serious. You do not want to miss out. Right? Pay attention. Okay, and so, you know, I truly believe that everything that I tell you guys aren't just, general information that's not really applicable. But I'm only giving you guys specific information that I think will be helpful for you guys, and most importantly, will be applicable to your own trading journey and just overall trading. Okay, so again, if you guys are always enjoying my content, enjoying listening to what I have to say, make sure you guys leave a thumbs up down below. It really helps with the engagement. It really does, right? And again, if you guys don't want to, and that's fine too, but I just want to tell you guys the reason why I'm always asking to smash that thumbs up down below, because it really helps and helps me get YouTube to recognize that people enjoy watching their content. So, hey, 5 likes already. Whoa, thank you guys. I didn't even look at the likes. So if you can always get to 10 likes every single time, it'll be amazing. But yeah, so with Kat here, Miner, I think Kat can definitely potentially give us a move to the downside if we're able to break below 320. So if we take a look at the hourlies here, yeah, so this one can drift higher from earnings. The only thing that, again, I'm worried about is that it could be extended a lot, actually, based on this trend. So if you're able to break below 320 and head into like 319 and 318, we'll officially make a lower low compared to, I would say, this low right here, right? And we'll also break below the 2-hour 21 SMA, which is not good, because that means the hourly trend is now broken and reversing to the downside. And I don't know if you want to consider this, but let's see, if we go on the 15-minute here, right? We're slowly making a very ugly looking a head and shoulders chart pattern, or I would say an inverted cup and handle. So that works too, right? Here's the cup and handle that's inverted, right? Which is bearish. But if you just want a full picture, this is the left shoulder, right shoulder, and head, right? The head and shoulders chart pattern. So if I do see a move down below 320, this one can easily come back down to hit at least 316 minimum, right? 316, and also why did I choose 316? Because that is the low on the earnings day candlestick. Okay, and why is the low of the earnings day candlestick important? Because that's where the buyers held off the sellers on that exact same day. So I'm pretty sure 316 will be a magnet for any type of large move below 320. All right, Rivian. Yeah, so I'm also looking at this one too. So Rivian, it stopped me out back last week. Yeah, right here. Okay, when I decided to break below $15 for a couple of cents, and I did not want to see this one turning into a loser, so I had to get out. But now we're seeing a lot more strength, and today for some reason we got way more volume on the daily time frame. We almost got double the volume, almost nearly double the average volume, and the candlestick was kind of small, but percentage wise, right, 6.20% on a day. That's not bad, right? So there is a possibility for Rivian to be making a potential double bottom, okay, or a nice W chart pattern. And I believe I mentioned this briefly a while back. Right? I think I mentioned this when I saw, well, when this price is going down, I wanted to see a retest of 15.70, potentially giving us something like this, right? A nice W double bottom chart pattern. But obviously things aren't going to go exactly like this, or perfectly, or ideally in my favor. And so currently right now, we're kind of making a lower low here, but we're still making a kind of a sideways double bottom, right? Oops. All right, we're kind of making right? So if we do break over the daily 21 SMA, because we retested that today after closing over the daily 10 SMA here, my red line, there's a good chance that Rivian can definitely see a short squeeze, right? And I forgot to mention, to add on to my market kind of summary there for you guys in the beginning, the other significant sign that I saw today that the market is slowly experiencing where its legs are slowly coming off, right? The foundational legs that are supporting this slow run up to the upside. Today, we saw a lot of unprofitable and just crappy and high shorted companies moving up. And one of them was Rivian. And the other popular one was Carvana. And they're moving up with good volume too, more than the average daily volume, respectively. So that is something to be worried about, because whenever you have that on top of everything that I just told you guys from the first 20 to 25 minutes, hey, 6 likes. Hello, what's up? Awesome. Great to see more people liking this. So, whenever we're seeing that on top of everything that I just told you guys on the very first 20 to 25 minutes, on top of the fact that we're seeing crappy companies starting to see short squeeze like price action, that is worrisome. All right, it seems like people who have already taken profits on profitable companies, or companies with great fundamentals, or just overall just the leaders, it looks like they're just having fun using those profits, a portion of their profits, to try to pump up these crappy companies with high short float or high short interest percentage, and just trying to have fun and grab a little bit more of profits by squeezing these names up higher. All right, and today we saw the first sign of that. Okay, so that is troublesome. And hopefully that silence kind of made you guys really sink in the information that I just gave you guys, right? So hopefully you guys heed what I have to say here tonight, and definitely continue to join my live streams. I am always giving you guys specific or general, but overall important and applicable information, whether it be specific or general, right? So always be paying attention to what I have to say. And if you guys have anyone else that you know are interested in trading, make sure you guys get them a good word about Charts Focus 1. Right? That's all I ask of you guys, right? And if you don't, that's your choice, right? I'm not controlling what you guys are saying. I'm just saying what I want to say. So again, it's again the likes, the just the basic stuff, liking my stuff, or the content that I bring you guys, or if you guys are enjoying something, if you guys are sending me messages at that, some basic stuff like that, I truly appreciate from the bottom of my heart that you guys take your time out of the day to do that. So again, I just want to thank you guys from the bottom of my heart that you guys are always commenting, liking on anything on my social media platforms, right? YouTube, Instagram, Twitter. But yeah, I hopefully I've been giving you guys some very good information that you guys have been able to apply to yourselves, and have been able to really just help your trading journeys, as you guys are going through this amazing and incredible journey in the stock market. Okay, so for Rivian, I know that's a big tangent and a very long tangent, but for Rivian, if you're able to again break over this daily 21 SMA, this is going to be critical for tomorrow. We should be able to see a rapid move up higher until we reach at least minimum $18. And the reason why I say 18 was that was a previous level of resistance or area of resistance back when we first retested this 15.70 support level, which is also a previous level of resistance back in early 2023. So for Rivian, if we're able to retest $18, most likely will be coinciding with this daily 50 SMA. Okay, oh, 7 likes, awesome. Hey, I see more people coming in. What's up, guys? You guys are kind of late, but hey, you guys still have the recording that will be automatically posted by default right after the live stream is done. So for all the people, the new people who are just joining in, please watch the first 20 to 25 minutes of the live stream, even if you don't have the time, right? But if you guys have the time, always watch from the beginning to the end, right? I always have critical information and very important, even if it's specific, well, whether if it's specific or general information, it's always good to have more information to be able to make better decisions. Okay, so Miner, there you have it, Rivian and Cat. All right, so we're about to hit that 40-minute mark, but again, this has been a very good live stream so far. Thank you guys so much for the engagement, the chat. But again, if you guys are liking what I do, please let me know if you guys are wanting to join, because I will have a huge surprise for you guys to join. So please DM me if you guys are truly wanting to come back, if you guys are previous members, or if you guys want to join as a new member. I have a huge deal for you guys, a huge surprise, not really a deal, but it's a huge surprise. I don't know what I'll be dealing with you guys, but it's a huge a present is a better word than deal. A huge surprise for you guys if you guys DM me on Instagram or Twitter. Okay. All right. And Miner, I believe I have DM'd you, so make sure you check that out through Discord. But yeah, thank you guys so much for joining this Thursday live stream. I know it's getting late in the Eastern time zone, so again, I'll see you guys next week on Tuesday. And if you guys forgot, my live stream schedule is every single trading week, Tuesdays and Thursdays from 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time, and we tend to go all the way up into 9 o'clock or right before 9 o'clock Pacific Standard Time, obviously. But again, thank you guys so much for watching. Thank you guys so much for engaging. Thank you guys so much for always appreciating what I have for you guys every single time I do these live streams, or overall, whatever I post on any social media platforms. I try to do my best to be active on all three, all right? Instagram, Twitter, and YouTube. So it'll be amazing to see if you guys are kind of showing me that you guys are enjoying whatever thing or whatever information that I put out there in the world. Okay, all right, have a great rest of your night, and Miner, I will reply back to you as well in Discord. And yeah, good luck tomorrow, especially with that PLTR, and I'll see you guys next week. Thank you guys so much for watching.